Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your daily technical analysis of foreign exchange markets.
Hello and welcome. Before we start, I just want to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or on any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, euro dollar. A second bearish black crow yesterday after the previous session's counter-to-counter bearish Harami and bearish closing black Mariboso. Prices were capped overhead by the familiar dark blue neckline, currently at 117.01, of this significant combined June to July head and shoulders top, which was also a double top formed from the head and the second shoulder, plus the October 2021 high at 116.92. The move lower did not quite reach the next support, and one that had been hovering down there for the last 2 weeks, and that's the rising short medium moving average, currently 116.27. Underneath that we have the November 2020 low at 116.02, with the 2019 high just below that at 115.70. Looking above, we have nothing much until July's high at 117.88 and June's high at 118.29. And the downtrends in between, currently 117.94 and 117.98. Now recently I believe the large combined head and shoulders and double top pattern to be the more dominant pattern here, and I'd previously laid out targets for these patterns below. The head and shoulders top primary target down in the 113.10 zone and a double top primary target down in the 114.55 zone have been achieved, but the secondary targets for both have become only harder and a bit out of reach, so I've retired them for the moment. However, there is another pattern to build up, a late June to date bright red descending expanding wedge pattern that's currently at 111.46 to 117.45. I'm now watching this pattern with great interest, especially as prices last week and the start of this week approach the upper bright red trend line. Finally, as I've said now repeatedly for months and months, we are set up with nearly 8 months of this year gone by for a possible annual key reversal pattern here. Thus, if we close on Wednesday the 31st of December 2025, either over 110.36 or under 103.53, then we'd be on. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the result at the end of the year will be, just that we are set up to achieve one, though right now it looks very much like an annual key reversal up. So far today, a small move lower from the open, down and piercing the green short medium moving average, but not by much and not stabilizing below it just yet. Cable, aka sterling against the US dollar. An indecisive spinning top pattern yesterday, but also a slower second bearish black crow as well. And that's after the previous session's bearish closing black Mariboso. It's a further bearish reaction by the market after last week's attempt to penetrate through on the upside, and that's a congestion between September 2020 high at 134.83 and 135.81, and containing within it the green flatlining short medium moving average, currently at 135 even. Yesterday we closed below the green short medium moving average after earlier closing right on it. We even dipped down below the September 2020 high, but still closed above it and within the congestion. Below we now have the 2024 high at 134.36, and then the rising mauve medium moving average, currently 134.06. Looking further overhead beyond 135.81, we have the congestion at 136.21 and the February 22 high at 136.43 before we reach target X at 136.78. Target X is the primary target for the break above the recent early July to early August descending expanding wedge pattern, and that's currently 128.98 to 133.98. The secondary harder to reach target X2 is up in the 137.88 area. Both these now have a question mark hovering over them with the downturn in recent days. Finally, much like euro dollar, we are set up here for this market to make that rarest of patterns a possible annual key reversal. Thus, if we close on Wednesday the 31st of December 2025, either over 127.29 or under 125.11, then we'll be on. Anything in between would have a lesser outside year pattern. I'm at this stage not even going to contemplate what the results at the end of the year will be, just that we are now set up to achieve one, though it does look like we are moving towards an annual key reversal up. Now, so far today, capped by the green short medium moving average, and prices have tried pushing down further below and out of the congestion between 134.83 to 135.81. But though we've travelled lower today, prices have not established themselves outside this congestion band so far, and we're actually up now testing the green short medium moving average on the top side. US dollar against the Japanese yen. An indecisive doji cross yesterday after the previous session's bullish engulfing pattern and bullish opening white Mariposa. The market is still capped by the Fibonacci congestion at 148.68, possibly stretching now down to the Fibonacci congestion at 148.11. All this, though the congestion of note is actually nearby, slowly declining gold long moving average overhead, which is currently at 149.13, but a little further up above the 50% Fibonacci line of the July 23 to July 24 move at 149.61. Looking below, we have Fibonacci support, and has recently been quite good Fibonacci support at the 61.8% Fibonacci line of the July 23 to July 24 move at 146.69, followed by what seems better support from the rising green short medium moving average, currently at 146.5. And below that, we have the now flatlining mauve medium moving average, currently 145.44. Overall, we are still in between the dark blue middle tine below, currently at 144.69, and a dark blue upper tine above, currently 155.29. Of the important, large, shallow, and longer term, early July 24 to mid-January 25, bearish shift pitch walk. This is one of the two major patterns in operation here. The other one is the broken, bright red mid-January to mid-June descending expanding wedge pattern. This had a break higher in mid-June, though it was more like a stroll higher. The primary target up at 150.5 was reached 3 weeks ago, though we still have live a secondary, much harder target X1 up at 158.85, which seems increasingly out of reach, as last week turned out to be a weekly key reversal down, though we've not really had a follow-through on it. So far today, well, a small move lower, though we've not really followed through, and we're still within this week's range. US dollar against the CNH, the offshore Chinese yuan. A second indecisive doji cross yesterday after the prior session's bullish engulfing pattern. Despite this bullish Friday action, we still ended up with a weekly key reversal down for the week, a pattern that has been copied in other Chinese yuan pairings. The market this week is trying to stabilize on or over the support seen for the last 2 weeks from the flatlining green short medium moving average, currently at 717.90. Meanwhile, the top side is still capped by the congestion between 719.64 to 719.91, very narrowish range there, consisting respectively of the May 2020 high and the 50% Fibonacci line of the September 22 to April 25 move respectively. Further up, we have resistance from the slowly declining mauve medium moving average, currently at 721.01, and a dark blue neckline extension, currently 721.79, of the late August to early November 24 reverse head and shoulder pattern, with just above that the congestion at 722.88, which ties in with the lows from earlier this year between January to March. Now, looking further below, we have the bright red trendline extension, currently at 715 even for the mid-January, late April descending triangle, which is now just about touching Fibonacci supports at 714.95 and 714.48. And that can be regarded actually as one single congestion zone. Finally, a strategic observation once again, and one I'll continue making here. Please note how the long moving average, currently 724.61, has been, despite some up and down waves, relatively flatlining for quite a while. So if prices do stray too far away from it, they seem to be brought back in towards it, and that applies in either direction. So far today, an interesting day already, with a higher high and a lower low than yesterday. Thus, the opportunity today to make a daily key reversal. So if we close tonight either over 718.73 or under 718.64, then we'll be on. It's actually quite a really narrow range. Anything in between would have a lesser outside day pattern. Now, the range for an outside day, which is, as I say, quite narrow, makes it highly unlikely for us to see such a pattern. So it would be a daily key reversal up or down made at tonight's close, I think. US dollar against the Brazilian real. A bullish closing white Maraboso here yesterday. Quite a long one given recent ranges. It was also a second bullish white soldier after the previous sessions combined bullish opening white Maraboso and bullish engulfing pattern, if only just on the latter. Now, prices were based on the dark blue neckline extension to the June to September 24 head and shoulders continuation pattern, currently at 542.76. And have moved up and away from the congestion zone below, made up from the 50% Fibonacci line of the April 22 to December 24 move at 544.57, and that stretches down to 540.16. Underneath that, we have a smaller congestion zone between the July 24 low at 536.76 down to the August 24 low at 537.5, and the congestion at 532.15. The move up was halted by the slowly declining green short medium moving average, currently at 550.61. That is just ahead of one of the showrunners for this market since April, and that's the overhead bright red upper time, currently at 551.84, of the mid-December 24 to mid-April 25 bearish Andrews pitchfork. Really, it's been a good showrunner for the market, that one. Beyond this, we have a recent July-based congestion band between roughly 552.21 to 561.09 before we meet the slowly declining medium the mauve medium moving average, currently at it's actually within that area, so 548.23. I'd just like to do a small correction. The declining mauve medium moving average actually at 560.35. My apologies on that one. US dollar against the Mexican peso. An indecisive spinning top yesterday after the previous session's immediate countering bullish piercing line pattern and bullish opening white Maraboso. Prices pierced and tested once again the recent cap on the market on a closing basis. Slowly declining green short medium moving average, currently 1878.16, as well as the congestion between the 50% Fibonacci line of the April 24 to February 25 move at 1876.94 and down up to 1885.40, eventually closing right on the green short medium moving average. Above all these, we have apart from the high 3 weeks ago at 1989.40, not that much resistance until the congestion band between 1915.03 to 1920.38, and that's made up from the March 20 low and the 50% Fibonacci line November 20 to April 24 move respectively. We also have the mauve declining medium moving average, which is currently at 1916.75, moving down through that congestion area. Meanwhile, below we have the very significant pairing of the February 20 low at 1851.74, along with the 61.8% Fibonacci line of the big old April 21 to April 24 move at 1850.81. Now, so far today, a test up to the top of the congestion band, the resistance that's at 1885.40, but we've pulled back down away from it.
Thank you for listening. This short version broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.